Ladies and gentlemen, welcome to another edition of In the Pit with your host, Lobo Tigre, the independent speculator. Our victim of the day is Ben Turney. He's the CEO of Kavango Resources. I don't know why he wandered into the pit with me. He's a brave sort because he's focused on projects in countries in not South Africa, but Southern Africa that are not on the top of many investors' wish lists. So, Ben, why don't, obviously I've got questions, but why don't you give us an overview and we'll go from there?
Thank you, Lobo. So Kavango Resources is a company with projects in Botswana and Zimbabwe. In Botswana, we have one of the country's largest land packages for exploration. We have about 14,000 square kilometers of ground, and our main area of focus is in the northwest of the country in the Kalahari copper belt, where we're looking for large-scale copper-silver deposits. In Zimbabwe, we're focused in Matabeleland, which is in the southern half of Zimbabwe, and our focus there is looking for large-scale bulk mineable gold deposits that we can bring into production ourselves. We're fully financed. We've recently attracted significant investment from Pure Bond Limited, which is the family office of a pair of British-born billionaires in the UK. They now own 52% of our company, and we're pushing ahead with all our exploration programs. We've been very aggressive with our drilling over recent years, and we have results due to come in over the next couple of months.
Well, that was admirably pithy. Okay, so let's just start with the elephant in the room, Botswana and Zimbabwe. All anybody can remember about Zimbabwe is white farmers getting expropriated, whatever that means. How do we know as investors that white mine owners from the UK with their posh accents won't get expropriated if they discover something?
It's a very good question, and thanks for picking up on the accent. I find that wherever we go, it commands a premium whenever I start talking to people about doing deals
You get like 10 or 15 IQ points just for the accent.
Well, yeah, and also it goes up about 10 or 15%, whatever they want to charge us or more. But no, it's a very good question. In Zimbabwe, I think everything that you read about that country is not aligned with the reality on the ground. It's certainly not the easiest jurisdiction in the world, but it is actually one of the countries in the world that has one of the strongest pedigrees of historic mining and current mining. Mining is a very, very intrinsic part of Zimbabwean society, and the country has had a lot of troubles, and the farm invasions of the early 2000s, that certainly has done a huge amount to damage Zimbabwe's reputation internationally. But when you look at the league tables and you see Zimbabwe at the bottom of the table for corruption, at the bottom of the table for mining friendliness, towards the bottom of the table for GDP and income per capita, the reality on the ground, Lobo, is very, very different. When I first went to Zimbabwe in August 2022, one of the things that really struck me was how well that country is functioning as an economy, as a mining economy, with no capital markets. So they don't have any sort of access to mine finance. They don't have business loans. They don't even have things like mortgages or car loans. So everything that you see in Zimbabwe has been bought and paid for.
Well, after the currency blow up, that's no surprise.
Absolutely, that's true. But the
So how
currency.
does it function? Sorry, I don't want to go too far down the rabbit hole, but that is interesting. How do you get things done in the financial world in a place after that blew up so spectacularly?
95% of the country is in the grey market, what they call the informal economy. So it's heavily dollarized. One of the main products that's being produced and sold in Zimbabwe is gold, which of course sells for US dollars. So there is a very well-functioning informal economy down in Zim, which is being driven by really quite, surprisingly larger scale gold mining that's being driven by technology from the end of the 19th century. It's a very, very strange place to visit, but I think I'd encourage any of your viewers that, sure, what they might read about the country, and it may appear like it's a terrifying jurisdiction to enter into. The reality on the ground is you have a very well-educated population, very friendly population. They have suffered a lot, and the economic troubles down there, they are meaningful. They have a very detrimental impact on ordinary people's lives. But there's also an entrepreneurialism about this country. The people are very hardworking. One of the favorite sayings that I've come across in Zimbabwe is, let's make a plan. Zimbabweans are all about making a plan. They find a way of figuring out a solution and making things work. So for an entrepreneurial company like ours, we're delighted to be in Zimbabwe. The jurisdictional risk is challenging. We have run into a few issues that are a bit on the unnecessary side, but that's why I've actually moved to Zimbabwe. So we're not trying to run the business remotely. I'm actually leading the business from the ground, and I've been very well welcomed so far. So being a white British male, it hasn't posed me any challenges down there. There's obviously a difficult history between Britain and Zimbabwe. Again, it's an elephant in the room. We've just got to face up to that. But my personal experience down there has been nothing but positive. So I would urge anybody to come and actually visit, come and see the opportunity that's there, because it's honestly enormous and this is world class.
It sounds like a classic appeal to Doug Casey. He loves that kind of contrarian investment, chutzpah, I guess, chutzpah. But okay, but let's be specific. If say you build a mine and you're making money, I mean, gray market, how do you avoid running into RICO statutes back in the West? You know, are you, if you're doing everything legally, can you even get your profit out of the country? Are there currency controls? Are you allowed to use the dollar, or do you have to use whatever the Zimbabwe's official currency is now? Like, how do you actually operate in such a gray zone?
Well, the simple answer is you operate legitimately. You operate with foreign dollars, foreign investment dollars that you bring into the country through what's called your ZEDA license, which is your Zimbabwe Inward Development Agency. You get a license which enables you to bring your capital in and then take 2/3 of your capital out. But what few people actually know about Zimbabwe, and a lot of this, again, it comes back to quite lazy interpretation and lazy reputation of this country. Zimbabwe actually has in place laws that protect the payment of dividends to foreign shareholders, because if you've created a surplus, dividends are not subject to any of the exchange controls that exist in Zimbabwe. And to give you a practical example of just how well the market can work there, Caledonia Mining, which is listed in North America and listed in London, they've paid 40 consecutive dividends. That's 10 years of uninterrupted quarterly dividend payments during 3 of the periods of the worst hyperinflation that Zimbabwe has experienced. So again, Caledonia Mining has faced its challenges. There are issues to do with the payment of gold, and you do have to accept 25% in the local currency, which at the moment is a high risk. But if you then balance that against the operating costs, against the margin that's available on these Zimbabwean projects, you have to remember that these larger scale bulk mineable deposits, by world standards, they are huge grade, so huge tonnage and very large grade. It's a bit like being back in Australia in the mid-1980s. It's the same geological setting. It's a jurisdiction that over 100 years had roughly the same gold production as Australia did. In 1982, Zimbabwe actually produced more gold than Australia.
I saw that in your slide, and the geological parallel, and then the two countries go very different directions. And particularly the big open pit bulk tonnage projects in Australia that never materialized in Zim. Why is that? Is that because of the political troubles, or is there a sense there that they don't want no big open pit mines, that's going to destroy the land, or why was there that divergence?
It was the civil strife following the internal troubles after full independence and majority rule. That led to a lot of trouble in some of the main gold producing areas, and the country never really recovered from that. There was a bit of a boom in the mid to late 1990s where you did start to see Australian companies in particular started to build very big presence in Zim and actually started to identify some of these deposits. They could see what they'd seen 15, 20 years previously in Western Australia. Unfortunately, then the farm invasions happened, and you talk about this as being in the elephant in the room. It's something I think we just have to have open dialogue about. The decision that was made back then and the manner in which the land reclamation was pursued, that made Zimbabwe a bit of a persona non grata in the international community. And really, that's what's held everything back ever since. So over the last 30 years, where Zimbabwe has struggled a lot, the geology hasn't changed. So the geological opportunity is still there. Those open pit, large scale bulk mineable deposits, they do exist. We've got evidence that they exist from historic workings and historic data that we have access to. The challenge in Zimbabwe has always been unlocking the difficulties actually operating within the country. But what we've identified as a business, that if you're strong on the ground, if you have your leadership, your senior management team on the ground, you're giving yourself a fighting chance of making it work.
Well, I guess I'll have to get my own boots on the ground to prove it. But just very briefly, and I guess I'm giving you a freebie here, but is it your sense that there's an awareness that, you know, maybe they didn't handle things the best way in the past, and that maybe they should do things a little bit more thoughtfully in the future? And I'm not trying to justify racial injustices or things of the past. I'm not saying that the past was fine. I mean, just the obvious consequences, though. I mean, surely there must be an awareness that, they paid an enormous price for what was done.
It's a very difficult question to answer. And look, I've been in Zimbabwe now for the last 18 months. I've been there permanently since the start of this year. So really what I know about Zimbabwe and the struggle that the people there have been through could be written on the back of a postage stamp. So I'm a bit mindful not sort of speaking out of turn. But from the limited experience I've had in the country, I think this is definitely a country that does need to break free from its past. I think there is certainly a willingness on the ground. There's a strong desire on the ground. There are a lot of Zimbabweans, they call them the diaspora, that have left Zimbabwe and are working all over the world. We have a lot here in Britain. There's a very large number in South Africa. They're in Australia. They're in other countries as well, sending foreign currency home. So the Zimbabweans work very hard. There's a very strong work ethic in that country. The literacy rate, I believe, is the second best in Africa. So the schooling system there has produced, consistently classes of people who are overall at a pretty decent standard of education. We've employed a lot of geologists in our Botswana operations, and we've actually recruited some geologists from around the world from Zim who are now coming back home. So I think that, yes, there is a desire at the ground level, but what the country does need to do is it needs to develop its system of government. It needs to develop a bit more of a sophisticated economy. The president has gone on record with his 2030 vision of turning Zimbabwe into an upper middle income economy by 2030. That is certainly possible, but there does need to be reform, and there needs to be a bit of forward thinking, a bit of sort of planning for the future.
Sorry, let me jump in with a bit of a sideways question since you're on the ground. Is anybody using the Zimbabwe gold coin? I mean, it makes sense after, $100 trillion notes to try to get real. On the other hand, they introduce a 1 ounce coin. That's too much for actual day-to-day transactions. Why didn't they do something smaller? Are they serious about doing that? This isn't really about your company, but just briefly, I can't help but ask.
I haven't seen any of the gold coins down there, so I imagine you've hit the nail on the head. As a unit of exchange, it's too great in value. There's talk at the moment about tying the Zimbabwe dollar to the price of gold. They'll need to figure out if that is possible. They'll need to figure out a way of doing that. They've looked at a gold-backed form of cryptocurrency as well. I've heard talk of that over the last few years. So there's certainly sort of discussion around different ideas. At the moment, I wouldn't put too much stock into those until we actually see some progress on the ground. I think the reality in Zim is that the US dollar really is the currency that most people want to trade in. It's the currency that they trust as things stand today.
Oh, anyway, that's another rabbit hole I won't go down, but okay. All right. So enormous geological potential, I'll give you that, no argument. Difficult jurisdiction, it's sort of like the Lundins go, the faint of heart dare not tread. Okay, but it is a difficult jurisdiction. You listed and started up with Botswana. Why the pivot to Zim if you have anything of value in Botswana? Isn't this sort of tacitly saying that we haven't come up with anything good there?
I don't think it's tacitly saying it. I think it's directly saying that we haven't come.
Okay.
Yeah. Yeah, no, the challenge in Botswana, look, Botswana is a wonderful jurisdiction to work in. It's a very large country. It has enormous mineral wealth. It has a small population that's focused in the southeast of the country. The challenge in Botswana is that 70% of the land mass is covered by Kalahari sand, which means the geology doesn't actually come to surface. So you're relying
and it's hard to drill through.
It's hard to drill through, but more than that, it's hard to identify where your drill targets are. So you end up with geophysical targets, lovely, colorful, pretty pictures, but until you put holes into those, you don't actually know what's there. Now, we've invested very heavily in Botswana so far, and so far we don't actually have anything to show for it. In the northwest of the country, are focused in the Kalahari Copper Belt. We're very committed to that, and we took on extra land in an acquisition at the end of last year. So we're certainly still very enthusiastic about Botswana. But what we have in Botswana, the main strength is the jurisdictional stability, but technically it's very demanding. In Zimbabwe, we've flipped that on its head. We've got technical projects that really are like shooting fish in a barrel, but it's the jurisdictional risk that we've swapped out. So we think in terms of our Southern African portfolio, there's actually a balance there between the two countries, plus the fact that they're linked to one another. We have our main operational hub in Botswana is up in Francistown, which is towards the Zimbabwean border. That wasn't by design, that was an accident, but it's something that's worked out in our favor. And there's a lot of logistical support that we've been able to provide between Botswana and Zimbabwe. So a number of our Botswana geologists have been into Zim to help us ramp up our operations there. So we're certainly still very enthusiastic. We're about to go into a drill campaign in the KCB. And if we make a discovery there, it could be enormous. We're looking for large-scale copper deposits in this country with an enormous land package that we believe would be very attractive to a large-scale mining company or mining interests in the event that we actually do hit something.
And all right, and I understand that's in an area of less sand, and who's paying for that?
We are.
All right, and you're fully funded for that?
Yep. So we raised towards the end of last year, we raised about £6 million. I mean, obviously, you ask any exploration company, are they fully funded? I mean, that's a bit of a piece of string question. That all depends on what we decide to do next. So
yes.
in terms of our immediate future.
All right, let me rephrase the question. The Pure Bond guys, obviously, they like the Zim play, but they're supporting your continued exploration in Botswana as well?
Yes, they are. So the Pure Bond guys, they took a 52% stake in the company. Now, that was significant, not only for the quantum, but they also went through a Rule 9 whitewash under the takeover code in the UK. And I can tell you that that was a painful process that they had to go through with all of the disclosures and everything that we had to do to get that process over the line. Now, having taken that 52% stake, they can trade freely in our stock between 50% and 90% of the issued share capital. So they are fully committed and fully supportive of our business, and they will act as our cornerstone and possibly more as we move forward.
All right, so that actually, usually I talk about share structure, capital structure later, but since you brought it up twice now, I have to say that 52.5% ownership in one party makes me a bit nervous. You know, as a retail investor, I could get thrown under the bus if there's some out that works for them, but not for people who are in at higher prices. Or so how does a retail investor take comfort in such a large part of the company? I mean, basically they own you guys. This is their company now. Why is that good for me as a retail investor?
Yeah, it's a natural concern that, you know, we are obviously aware of, and I've spent a lot of time working in this market, and I've seen these sorts of situations that haven't ended well for retail investors. What I would say about the Consagras is that they really are cut from a different cloth. We had an interview with Bulo Consagra that he did with an interviewer in May last year, and I'll put this back up on our Twitter feed when we release your interview. I would urge people to listen to that and just listen to the man yourself and take your view on whether or not you think this man is what he says he is. For what it's worth, I believe he is. And I think that's already been proven. When we did the deal with Pure Bond, we agreed on a price of a penny to put the £6 million investment in. This was back at the start of May. In early June, we had a drill result that went against us, and our share price halved. We went down to 0.6 of a penny. On the morning of the drill result, I spoke to Bulo, told him the bad news, and his exact words to me were he didn't care how far the share price fell. Pure Bond is in this for the long term. They would not try and seek to renegotiate the terms. We had made a deal. They're long-term investors, and they were sticking at the 1 penny price. So that meant that from day one of closing that transaction, they were already between 30 to 40% down at a stroke, and they didn't once consider even trying to renegotiate. During my time on the market, I've literally never seen that happen. I don't think I've ever seen a deal that's managed to survive.
In the opposite quite a bit. No, okay. Well, taking you at your word, that is impressive. And I guess one quick point there, I noticed you've got 1.3 billion shares out and you're not Australian. And the 0.86 price, that's 0.86 of a penny?
Correct, that is.
British penny.
So one of the oddities
anymore, I'm a little confused. That 0.86, what is that?
It's 0.86 of a pence. So 1 British penny, as you put it.
All right. Any idea of a share consolidation there, or we're comfortable with? I mean, actually, I don't know if on the LSC that matters, if that would scare people as much as it does in North America, but that share structure makes me nervous as a potential shareholder that I'll get rolled up before you raise more money and dilute me.
Yeah. So again, it's another very good question. One of the things about the British market is that British retail investors typically do tend to trade in penny stocks. It's one of the oddities about the London market, where in North America, Canada, the US, you tend to deal in sort of much larger sums as the actual nominal price of the shares. In the UK, investors are attracted to these penny stocks. And at the moment, we're still a pre-discovery company. So we are still a penny stock as far as the market's concerned. At the point that we make a discovery and we have a more tangible, more fundamental business, it will certainly be part of our plan that we'll look to do a consolidation. But at this stage, that's not part of our plan. Once we become more of an investment grade opportunity rather than a speculative opportunity, which is where we are today, I think at that point, that's when we'll make the transition.
I would dispute the idea that any mining venture is anything ever more than speculative, but okay. Thanks for explaining that. And it was a real eye opener. And just to be clear, you're on the main LSE board, you're not LSE AIM?
Correct. Yeah. So we're on the standard list, which is on the main board of the London Stock Exchange.
All right. Well, let's talk about the rocks. What are you going to work on in Zim this year? What are the deliverables?
Drilling. I mean, the simple deliverable is that we want to get into these projects as quickly as we can, and we want to drill them. We've identified all of the sites that we want to drill. We've secured options on 3 projects that we've already drilled one of them, and we're just starting to drill the second at this point. We have the third drill program lined up, depending on what the results are for this current round of drilling. So really what we're looking to do is to test these possible deposits, these possible ore deposits where there's signs of both historic high-grade underground mining and also near surface, more recent artisanal and small-scale mining. A lot of the scouting work on these projects has already been done. So our job is to get into these as quickly as we can and find out whether or not they pass the tests that we're applying to become a potential bulk mineable ore deposit. If they fail the grade, we move on. We cut the project and we move on to the next project. If it makes the grade, then we move on to resource drilling. So that's the plan in Zimbabwe. We've already hit the ground running. We've drilled 1,400 meters already. We're about to get our samples sent out of the country for testing in Johannesburg. In Botswana, it's going to be a bit more of the same, albeit on a more challenging technical environment. So we've just flown airborne surveys recently, which gives us a complete data set over the entire area that we cover. We're going through quite intense interpretation of that data at the moment, putting together final drill targets, and it's our hope to start drilling in about the next 6 weeks or so on that project too. So in Botswana, it's going to be much more sort of proof of concept, proving that the mineralizing system, the copper mineralizing system we believe is under that sand cover is there. In Zimbabwe, it's looking for economic deposits. So that pretty much sums up our targets for the year.
All right. So I have a couple of questions here. I noticed at Nara, it's described as a producing gold exploration project. Isn't that kind of a contradiction in terms? Like and I'm guessing just there's some small scale production there that doesn't really matter. It's free prospecting, or explain this to me.
Well, this is exactly the nature of the opportunity in Zimbabwe. So it all comes down to the style of mineralization. When the gold was in place, what you typically have are these parallel reefs that run alongside each other. They don't run in straight lines, but let's just imagine for the sake of this example, they do. Historically,
our audience, it's international, but 70% North American. Is there a difference between a reef and a vein, or is it just any vertical or subvertical structure? What is a reef?
Let's call it a vein. I mean, that's probably language that maybe your viewers would be more familiar with. So you have these veins running in parallel to one another, and the veins typically carry the high grade material, and that is what would have been mined historically. Might be running at anywhere from 10, 15 grams a ton, but these veins are relatively thin. And once you reach the end of the veins, the mining stopped, and the veins could have ended for any number of geological reasons, from tectonic activity, or simply to the gold running out. Now, what we're aiming to do with our drilling is we're looking to hit these veins at a 90-degree angle, broadly speaking, to test the material that runs in between. This material is typically gold bearing. You have a halo of mineralization that occurs around the side of the veins. And what we're looking to test is whether or not that halo of alteration, if first of all, it's sufficient grade and sufficient tonnage to provide a potential bulk mineable operation. So it's really quite a simple model. We've got some media that we're about to be releasing on our Twitter feed and on our website demonstrating this. But this is really what was at the heart of the Australian mining boom. It's when the Australians figured out that by hitting these historic, what they viewed might have been, let's say, 6, 7, or 8 different mines, when they started to conceptualize these as a single ore body and testing it with this perpendicular drilling, it was at that point, that's what really gave birth to the economic boom that Australia's experienced over the last 40 years. We're looking to replicate that in Zimbabwe.
Sure. Well, I guess, and not that North America is the only thing that matters, but in North American terms, this is the Osisko model, where there's an old high-grade mine and you look for the halo mineralization around, and lo and behold, there's, megatons there. But all right, so why is there a, I mean, at first I looked at it and I said, oh, wow, look, there's an indicated resource. And then I said, 5,000 ounces? Like, why would we even bother publishing something that small, at bulk grades, if it's not, hundreds of thousands of ounces or millions of ounces? Who cares? Like, oh, sorry, but it looked like we're wasting money. Why even look at something like that if the bulk tonnage target is where we're going?
Because what we're also looking to do as a business is to generate short-term profits to pay for our exploration. We'd like to develop our model so that we're not constantly having to come back to the market with the begging bowl out and diluting our shareholders. There is significant opportunity in Zimbabwe, and I didn't actually answer the rest of your question earlier about the small-scale mining and sort of, isn't that a bit of a sideshow? Well, from an exploration perspective, yes, it is a bit of a sideshow, because what these guys are pulling out, they're using hand picks to mine this stuff, or blasting and lifting by hand. So the actual amount of tonnage that they're taking out from the remaining high grade isn't so much, and they're not touching any of the larger bulk tonnage. So we can still carry on doing our exploration while they continue doing what they're doing, supporting their families in the local community. But the 6,000 ounce resource that we've just published, that's all sitting in a sand dump at surface. So it's already been mined. Processing that and bringing that into cash flow is a very, very straightforward job. We're working on the model at the moment, so we're doing the metallurgy on that sands dump, and we're getting a plant designed. We expect to have those results within the next 3 to 4 weeks, and then we think from commissioning through to first gold production will only take 4 months. Now, you're talking probably at around about $10 million of recoverable gold in that dump that we could extract over about a 2 to 2.5 year period. That's pretty significant funds coming into a business like ours to help cover our basic costs so that we become profitable in our own right as an operating company. But it will also go quite a long way to helping pay for the project and contributing towards our exploration costs as well.
Exploration with cash flow is a beautiful thing. I'll give you that. But exploration and production are very different skill sets. Who's going to build that? Who's going to produce that? You? What? Actually, I didn't ask you. Are you a geologist? What is your background? And so how? I mean, there are small juniors that have broken their pick on this bootstrap strategy beyond number. What makes you different?
Well, we're heavily financed and backed by the Consagra family, so we have the working capital behind us to deploy into these projects properly. But what that also means that we can do is we can develop this profitable side of the business over the next 6 to 9 months, and by the end of this
forward-looking statement, hopefully profitable side of the business.
Hopefully profitable. Yeah, sorry, apologies. This is North American market. So yes, no, you're absolutely right to pick me up on that. But in terms of who's actually doing this, I touched on this earlier. There's a very strong pedigree of mining in Zimbabwe. Capital markets aren't functioning, and people have been leading pretty much, as you put it, bootstrapped existence. So a lot of the mining that's being done down there, it's heavily undercapitalized. So for a company like ours to come into Zim, we've pretty much got the pick of the employment market, even the entrepreneurial people who are typically used to working for themselves. What we can provide them is stability of access to finance and stability of employment. And that actually matters a great deal down there. So we've already built our exploration team. We've leveraged off our experience in Botswana and the team we already had. We built that very quickly. What we're now focusing on is building up Kavango Mining, which is our wholly owned subsidiary in Zimbabwe. And we're putting into that the technical mining skills that are needed to develop this side of the business. We're not going to get rich on the small scale mining. We know that, but there is quite significant potential within that to become quite a big contributor to our bottom line.
If you don't break your pick. Okay. A sand heap, maybe. You also have started or you have press release that you started production at Hillside, one of your other projects. I assume there's no feasibility study because it's small scale. I mean, you're talking about taking half a kilo a month, take a kilo a month. Again, this doesn't pass the go big or go home test. I get the exploration with cash flow idea, but you're complicating your business. And if you're doing it yourself, I assume you didn't just hire a contract miner and say, here, go ahead and ramp up. We'll give you the money. You give us our royalty and take it from there. Why should I not be scared about you going into production without, a feasibility? I mean, and on something so small that it can complicate your life without really becoming a company maker for you?
The only way I can really answer that question is if you come on the ground and see what we're actually building, because you're absolutely right. No matter what I say sitting here to you today, I can't really answer that question in a way that would allay those fears. All I would say is let's talk in 3 months' time and see what our numbers actually produce, because from what I've seen on the ground, what is possible down there with no capital, with no modern mining methods, with no proper approach to PPE, health and safety, which is very important in mining, with what I've seen in terms of the skills of the local labour force and really how talented the miners are down there and what our capital can do and really the returns that can be generated. The example I would possibly give, which might help, is that a lot of the gold production in this part of the world has been relying on stamp mills. Stamp mills are piston-driven crushing units from the late 19th century. It's quite incredible just what has been achieved in Zimbabwe using this technology that's 130, 140 years old. And that for me really encapsulates the opportunity. With a bit of investment, with things being done in the right way, you can actually yield really quite significant results. So sure, at the moment, a kilo of production a month, it doesn't sound like much, but if you consider that it's taken us 3 months to get to this point, consider where we'll be in 3 months' time once we've got this project really humming and once we've started to introduce some other projects into the mix as well. I think by the end of this year, you're absolutely right, it won't be a company maker in its own right. The real company makers will be the major discoveries that we make. But if we have a business unit here that's generating, let's say, $300,000 or $400,000 a month in revenue, that puts us in a pretty strong position as an exploration company in this space.
I hear you. I guess I'm probably once bitten, thrice shy on this thesis. So if you had told me, well, we're not going to do it, we're contracting it out, we're going to focus on exploration, and we're going to get the cash flow or our share of the cash flow, and the risk is on another party, I would have felt much better about it. But show me, don't tell me is an acceptable placeholder for now. So sorry, I had another question about Pure Bond. There was another statement that I just couldn't let stand that way. In your PowerPoint, it says you have investors who intend to invest another US 40 million. Is that Pure Bond? And intentions are like wishes. If beggars had them, they'd ride on horses, right? All that stuff. Can you quantify, qualify, solidify that statement for us? And at what dilution does that bring for retail investors if your big investors buy in that much more?
So we obviously can't solidify at this point because we haven't finalized any terms. We've seen proof of funds, so we know that that money exists and it is ready to deploy. The question is, how do we deploy it? Now, if we simply pursue the route of just direct equity at this stage, there's no point us remaining as a public company. If the Consagras had wanted to buy us as a business, they could have bought us last year when we were on our knees. They would have been able to do that, no problem at all. But it's their intention that we remain as a public company. And I mentioned earlier the interview that Bullo himself gave, which I will put up in conjunction with this interview, where he talked about bringing all shareholders along for this journey. I believe him. I believe that's sincere. As you know, there are different ways of being able to introduce money into a company, different structures that can be applied. As things stand today, we don't need to tap into any of that because our plan is financed and we're moving forward at the pace that we feel we can grow at that's realistic. But what we know is that we have that money in the background and that, obviously there are no guarantees at this stage, but having a major shareholder on our books with 52%, who's done everything that they said they would do so far and has behaved completely honorably with us as a business and also our shareholders so far, I'm feeling pretty confident that we are in a very, very strong position. So again, this comes back to your question earlier about a one of trust. And really, that's what people will have to decide. Do they believe this pitch that I'm making today about Kavango or don't they? If they do, buy our shares. If they don't, move on, buy another stock. It really is that simple.
All right. So back to the rocks then. And just for clarity, in terms of expectations, what we're looking for this year, you have drill results pending from which project and where are you drilling now?
So we've got results pending from Hillside. That's where we've drilled the 1,400 meters. That's the project that we've just brought into production. So our exploration, this pretty much encapsulates our model moving forward in Zimbabwe, where we're continuing the high-end exploration, looking for the bulk mineable deposits, while at the same time looking to generate profit from that site while we move forward. The next drilling in Zimbabwe is at the Nara project. That's just about to start as we're filming this interview. We've got the collar locations identified, the drill contracts being signed, and the drill team has mobilized to site. That drilling will probably take about 3 months. We're going to announce how many meters we're drilling very soon. After that, we should hopefully have the Hillside results back, and hopefully we'll get the first of the Nara results. We'll then have to decide where we deploy the drill rig to next, but it will certainly be going back to one of the projects. And from what we've already seen at Hillside, we've seen some very exciting looking rocks. We've referenced in our announcements the visual indications and how enthusiastic our team is about this. But this being gold exploration, until we actually get the values back, we can have the best looking rocks in the world. We won't actually know until they've been properly tested. So
even though specs of VG can be greatly misleading in the drill core, I get that. But okay, so 1,400 meters isn't a lot. That's proof of concept, I guess. There's a couple of these veins you're going to hit perpendicularly, see if you get that halo mineralization. How many holes and to what depth?
4 holes. We did 3 holes of 300 meters. Sorry, I need to get my maths correct here. We did 2 holes of 300 meters and 2 holes of 400 meters. So obviously that's not to that depth because we were hitting it on an incline, but that enabled us to test these vein structures.
Is it 2 fans giving you some strike, or?
We tested across 4 different targets. So no, we put one into the guts of each of the target areas that we're looking at. So we drilled 4 prospects in the first instance.
And if your target is bulk tonnage, I'm not going to see a headline that says, we hit 50 grams per ton over 3 centimeters.
No, I mean, look, there's no point us announcing something like that because who cares, frankly. No, we're looking for wider intersections of mineralization. That's really the secret here. That's what investors should be looking out for.
All right, well, I'll hold you accountable for that. If I see that headline, I'm gonna ask you why. All right, okay, so deliverables really are focused on drill results, and then we see where we go from there. We get proof of concept or not. Sounds good. I get it. Pre-discovery exploration, swing for the bleachers here. I understand the story. If there's anything else you want to add to the story, go ahead. I've got my one final question though, and I always ask everybody, I understand what you're going for here. I noticed on your slide that your own name was not present amongst the significant shareholders. And if you're asking me or my audience to put our hard-earned money into this, I have to ask, how much of your own have you put in? How much skin in the game do you have, Ben?
I put actual cash, £175,000 into Kavango. Every single share that I own, I've bought. I've currently got, I think it's just under 2% of the company. So our board holding is around about 8.5%. Peter Winterby, who is on the deck, he's got 5.5%. I'm then the next largest shareholder, and then Hilary Gumbo, our co-founder, he's got around about 1.5% as well. So I just think that's a bit of an oversight. Now that you've brought this up, I think it's something we should add to the deck because I do have quite significant skin in the game. I'm quite heavily down on my investment as things stand. I've participated in every financing. This is all a matter of public record since I joined the board. That's actual cash that's gone in.
Sorry, just to be clear, you say you bought every share. Participating in the financings is good. Have you also bought on the open market?
Just about to tell you, I bought twice on the open market over the last 18 months. So yes, I've done that as well. So yeah, I mean, look, with my most recent purchase being £50,000 in December last year. So yes, I put my money where my mouth is. It's a bet on myself and bet on my own ability to take this company forward. So far, we've had a hard time, and I'll be honest, this company has been difficult over the last 18 months. We've not had the success that I believe our team really deserves for all the efforts they put in. But as you said earlier, this is swinging for the bleachers. This is high risk exploration, and unfortunately, Mother Nature can be cruel.
She loves to torture geologists. Okay, well, you've been a good sport with some pretty direct questions here, so I'll let you have the last word. Anything else you want to make sure that our audience carries away from this interview?
I think really come back and take a look at us in 3 months' time. I think by that point, a lot of the questions that the market have about Kavango will be answered. We'll have our first results out. We'll have proven what we can do on the ground in terms of generating our revenue in Zimbabwe. And we'll have also started drilling our targets in Botswana. We are extremely excited about those. The market, I think, is a little bit weary of our efforts in Botswana because, to be honest, we've had a lot of failure there so far. But we've transformed our exploration team. We brought in Dave Catterall, who discovered Zone 5 that was recently sold for $1.8 billion in Botswana. Dave has been leading our exploration for the last year in Bots and has really transformed things. So we've got some very, it's high risk, but very exciting drill campaigns that are lined up for the rest of this year. If you feel like you have the appetite for taking that risk and coming on that journey with us, then put your money where your mouth is as well.
All right. Well, thank you very much and keep us posted.
Thank you for having me.
Thank you for watching this edition of In the Pit with Lobo Tigre. If you enjoyed or found value in what you just saw, and you're watching this on any sort of social media, please do hit the like button and the share link. Send this on to anybody you think might be interested. That helps us out a lot. If you're watching this on YouTube, please do hit the subscribe button as well. The number of subscribers helps us get more valuable content to you as well. On the subject of subscribing, I'll quickly say that if you're not a subscriber to our free weekly Speculators Digest, I encourage you to sign up. I promise if you do, we will not send you a flood of daily advertisements. You get one free weekly digest with original research not published anywhere else. Check it out at independentspeculator.com. Thank you and have a great day.